Hello and welcome to traders and investors. I'm glad to present to you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. Bitcoin dropped to the 60,000 USD level during the latest sell-off, followed by an aggressive payback that pushed the price nearly 10,000 USD higher. However, at this point there are still no signs of a sustainable uptrend or even a proper corrective move. It is premature to assume that Bitcoin has finished its decline. Bitcoin has lost more than 50% of its value in just a few months. The current downtrend has been in place for only 4 months, which is relatively short. For comparison, the previous bearish cycle lasted around a year and a half. This suggests that Bitcoin is likely to continue declining in the medium term. On the daily time frame, Bitcoin remains in a clearly defined downtrend. The market structure is bearish, and the CHOCH change of character level is currently located at 97,000 USD. Only sustained move above this level would allow us to consider a potential end to the bearish trend. Bitcoin reached 60,000 USD level within just a few days. It is worth recalling that the sell signal was formed inside a bearish fair value gap between 96,900 USD and 98,000 USD, and that signal was fully confirmed. As a result, traders were able to capture nearly the entire recent move. The current downside target remains 57,500 USD. On the daily chart, the nearest sell side point of interest is located at 79,500 USD and 81,100 range. On the 4-hour time frame, price continued to build a bearish structure as well. The CHOCH level is positioned at 90,560 USD, and only a move above this level would indicate a potential shift toward a bullish trend. At the moment, however, there are no signs that Bitcoin is ready to end its decline anytime soon. The most recent FVG was ignored by price and has now transformed into a bullish fair value gap inverted. In theory, this pattern could be used as a source of potential buying signals. However, while the level was technically tapped, no meaningful bullish reaction followed, which further reinforces the prevailing bearish bias. Ethereum has lost nearly half of its value over the past 2.5 weeks. On January 19, ETH was trading around 3,350 USD. And by Friday, February 5, price dropped as low as 1,740 USD. Bitcoin dominance remains elevated at around 60%, which means that during sell-offs in digital gold, most altcoins tend to decline even more sharply, and Ethereum is no exception. On the daily time frame, Ethereum continues to form a bearish trend. At the start of the latest sell-off, no direct sell signals were formed on ETH itself, but a clear sell signal appeared on Bitcoin, and this signal could also be applied to Ethereum. At the moment, there are 3 bearish patterns on the daily chart. All of them fair value gaps. These zones may offer opportunities to open new short positions in the future. The nearest and most relevant zone is located between 2480 - 2630. The CHOCH level is positioned at 3,395 USD, marking the latest lower high. As long as the price remains below this level, the bearish trend stays intact. The current upward move should be viewed strictly as a corrective rally, which may take some time to play out. On the 4-hour time frame, the magnitude of the sell-off is clearly visible. During the latest leg down, 3 bearish FVG were formed. The most recent one has likely flipped into a bearish IFVG. In theory, this level could be used for short-term long positions, targeting a corrective move rather than a trend reversal. That's all for today. See you online soon, and good luck.